Hi, I'm Som Seif, President and CEO of Purpose Investments. We've all enjoyed our summer months here, but one of the things that's been interesting as investors, we've actually had a very volatile and noisy time. Europe, Greece, all the noise coming out of China with the devaluation of the yuan, the US dollar appreciating so aggressively, energy markets, all of this volatility has impacted us and has been very noisy for our portfolios. Well, now we're going into the September months, kids are going back to school, maybe it's time to look at our portfolios and do a little bit of a checkup. And here's a couple things that I think you should all look at. First, diversification. If you look at equity markets, bond markets, they're generally quite expensive. At times like this, you will be rewarded for being properly diversified, not only in just how you allocate to the portfolio of equities and bonds, but also look beyond equities and bonds, how much you have in commodities, in alternative asset classes, real estate, other areas. Two, look in your equity markets beyond Canada. There is a great opportunity to invest beyond the Canadian marketplace. The US has been on a bit of a tear lately. The currency has been benefiting many investors. Make sure your equity portfolio has great stocks in the United States, great stocks outside of the United States, and really diversify your portfolio into all of the areas that are out there for you. You'll be rewarded for that. Three, when you look at the markets and equities, there's been a real big move in high growth stocks. Companies like Facebook, Apple, Amazon, Google, these have been really driving the markets, and the markets actually look quite expensive. On the surface though, when you actually dig down deeper, the actual markets look pretty attractive. I believe that in the next couple quarters you will be rewarded by being more of a value-oriented and a quality investor than you will be chasing a lot of these kind of growthy names that are trading at big PE ratios that are really trying to change the world. You don't have to change the world in a value company to really make great money for yourself. Four, currency risk. Make sure that you understand what kind of currency risk you have in your portfolios. Now, I talked earlier about the idea of investing in international markets and specifically the US. Well, the US has had a wonderful move in currencies, and Canadian currencies, of course, has declined quite dramatically. Well, how do we want to position? There's two ways to do it. One, you can accept the currency risk, which I actually think is a really positive thing for a long-term investor. But for shorter-term investors, if you aren't really sure about that currency risk, there's some really wonderful options out there to hedge away your currency risk with both the US and international markets. My view is currency risk can be managed, and either way, you really want to be mindful of how much risk you are taking in currencies. And finally, your fifth thing you really want to look at is interest rate risk in your bond portfolio. We are sitting here in markets where interest rates are extremely low, both here in Canada and the United States. Now, the Fed in the US is talking about raising rates. Bank of Canada has recently been reducing rates. The reality is, though, the bond market isn't going to give us a significant amount of return either way. And if we go into a rising rate environment over the next number of quarters and couple of years, you aren't getting rewarded for the amount of risk you are taking on terms of taking long duration or long maturity bonds. So the way you want to position your bond portfolio is really reduce the risk, reduce the interest rate sensitivity by going to shorter duration bonds in your portfolio, and make sure your portfolio is well positioned for the eventuality of a rising rate environment.